Hi everyone, this is Ryan B with Practical Forex Trading. This is your weekly analysis for the pound dollar, Great British Pound versus the US dollar. The date is February 16th, 2020. We are looking at the daily chart, and my sentiment is bearish but cautious as the pound has been having some knee-jerk reactions and a lot of big, tall rallies that may not be over yet. So let's go ahead and talk about that. If I go back to my weekly chart, I see that we have a multi-year downtrend. Let's go ahead and go out to the monthly. If we look at this monthly downtrend, we see our candle action, and sorry for all this text. Let me see if I can pull this out of the way. We see that with the monthly chart, recent highs are starting to actually pull away. We see the pound topped out at about $1.33, right? So we had this, and we used to think about the monthly. It's the largest of all the chart time frames. This is the biggest scale. So in the very big picture, we see that the candle here forming. I mean, February is not over yet. If this were to push up in a very strong manner towards resistance, that could be bullish. But when we think out on our moving averages, oops, I already have them ID. Okay, so we see that we're moving above the fast monthly, but price is now just cutting through. Let me get rid of these smaller time frames. Price pulled back to the 50, between the 20 and the 50, and is now working its way back down. If we add the 20, 50, and 200, so when we think about moving averages, when the fast is moving in front of the medium, in front of the long, that's when our downtrend is fully in place. So we see that price had moved above the monthly fast moving average, but now slipping below the 50. So that's a very long-term something to think about, especially for day trading, but that helps influence decisions in the next scale. So here we go to the weekly. And we see with last week's action, price rallied all the way up to this $1.3050 mark, around that area, touching the 200-week moving average, but barely closing above it. So now price is moving above the fast weekly moving average. However, the body is kind of going through it. So that we're at this a literal breakout point anytime now for the pound. We could see breakout. However, we got to think that this uptrend, this 5-6 month uptrend, is very young compared to this multi-year downtrend. So that's what I'm going with, as in the big always wins. I'm also bearish because price is moving now below even the 200-week moving average. It went below it and then came back up and tested, could not exceed. And our moving average is about to collide. So let's go ahead and get a little bit more granular into the daily. Okay, here's the daily. Now we think about moving averages. Price is moving above the fast daily moving average. However, we had a bearish crossover, fast to medium, right? The fast dropped below the medium. When price tanked here, price came back up and is now moving below this 50. So that's a lot of times we think about when price kicks back between the 20 and 50 is like a good pocket to buy or sell. So it happens here, right? When things are bullish, price went down in the 50, move, boom, goodbye. Down here, move down, goodbye. So now the tables have turned, right? It flipped. And so now we think about good opportunities to sell. Now you don't want that to be your only basis for creating a sell. You never use indicators just as a basis. But price action, okay, that's also what we're working with. We're talking about a multi-year downtrend. Price has now failed to close above that 200-week moving average and is now in this potential sell pocket. So that's what sets us up for, this might be a good sell. However, I'm very cautious this week because we see that also, look at this. This is the 204-hour. Price is just having a hard time closing above that. But it's still above the fast, so we have this potential. The pound would not be out of character for the pound to kick up into weekly R1 at 13120. So the U.S. dollar has been on a real tear, but the pound's been staying pretty buoyant. So let's go ahead and set a parallel here. Let's think about where this next trend channel lies. Okay. So price could push up and receive another sell. Price could stay below this line here if it holds. So this is really where you have to be cautious. If you were to enter a sell here, you really want your stops above 3120, and that might be holding, for a pretty long time. Or you can do the play where you make a sell here and then you put your stops at 3080, because that would mean price is continuing towards resistance 1. But in the big picture of things, we should be seeing this pair drop off soon. And this is the basis for short term. So if I'm day trading, I'm looking at this trend channel. See how price action would go up, come down, get rejected, get rejected, get rejected once again. So now it's either just going to fall off or try to push up again for another possible rejection by sellers awaiting. But we see last week when price, a couple weeks ago, when price came up and touched that 400, the very next week opened with a big giant bearish candle, right? So potential for that to happen again. If so, if we see price fall, we'll have first support at 1.2923. And then from there, if we see break below that, we'd be shooting for new lows. Let's go ahead and look at our daily. So there's our support at 2923. If price were to break through that, I think we'd see an attempt to touch the 200 daily moving average right about the $1.27 mark. So, all right. Good luck trading this week. Be cautious with the pound. And I wish you all a very profitable trading session. Have a good one.